lost the dollar as the world currency. It's like Russia. It's going out now and doing its own thing, and they're going out bragging about how they don't need us anymore. We cannot lose our dollar standard.
And it's a ticking time bomb, and according to the IMF, it is ticking louder than ever.
Empires do not pay. That's the lesson of history. Empires cost a lot of money, and in the end, the imperial power goes broke.
Welcome to GVS Deep Dive. I'm Najma Minhas. And today I'm examining a question that's gaining traction across global markets. Why is the US dollar crumbling? The US dollar is collapsing, and it's not just an economic story. It's about the unraveling of American power. Trump's chaos, the skyrocketing debt, and global rejection of the dollar are creating the perfect storm. If the dollar falls, it's not just America that changes, the whole world will. And that future may already be here. The dollar's decline is real, and it's scary for American power, for American hegemony, and American prosperity. That US exceptionalism we all hear about is seriously under threat. The dollar's dominance was never about fairness. It was about control, backed by military might and political coercion. The greenback became the weapon masquerading as a currency. Today, that weapon is misfiring, and that the empire behind it is unraveling. Now, the dollar index is headed for its worst first half of a year in at least 4 decades. Now, this isn't just a market dip. Many now are calling it the beginning of the US dollar's collapse. The dollar index, which measures the dollar's strength against a basket of 6 other currencies, including the pound, the euro, and the yen, has slumped more than 10% so far in 2025. This is the worst start to the year since the end of the gold-backed Bretton Woods system in 1973. Now, this isn't what the markets were expecting. When Donald Trump took power in his first administration, the dollar went up by 13%. And it's not difficult to point the finger at who's responsible either: Donald Trump. Concerns about President Trump's tariff policies, questions over the Federal Reserve Bank's independence, and the growing US government debt have all put weight on the dollar. Now, this devaluation of the dollar is important for all of us, for the global economy, given that the dollar is the primary currency for trade and finance. Now, I'm going to break down the current reasons for this de-dollarization in detail, so do watch till the end if you're interested. But first, why talk about this? Because in an era of shifting alliances, currency wars, and rising alternatives like China's yuan or other digital currencies, the strength of the US dollar is about more than just numbers on a chart. It's about US perception, prestige, and power. When the dollar is strong, the US doesn't just look like a powerful economy, it feels and acts like the center of the world. And for a country that built its post-World War II leadership on economic dominance, that's not just symbolic, it's essential for US hegemonic power. The US dollar has been the most important currency for the past 80 years, and it remains the world's dominant reserve currency. With that comes what former French President Valéry Giscard d'Estaing famously called an exorbitant privilege. This refers to the unique position, the advantages that the US enjoys because the dollar is the world's primary reserve currency. It allows the United States, for example, to borrow cheaply, to run persistent trade deficits, and exert global financial power through wielding sanctions through dollar-based systems such as the SWIFT system. Essentially, it gives the United States unmatched leverage without bearing the usual economic consequences that any other country would have if, for example, it spent more than it earned. The dollar is involved in approximately 88% of all global foreign exchange transactions, and it accounts for around 55% of central bank foreign reserves worldwide. This is down from a peak of 73% it had in 2001. Now, the dominance isn't just about economics. It's about that global status it has and the influence. It's the kind of position that the British pound once held before 1945, when it was the world's primary reserve currency, and the sun never set on the empire, as they would say. Today, the sterling, which is what it's known in the foreign exchange markets as, makes up only around 5% of central bank reserves. It was feared feared by the Americans that the dollar's position would be challenged when the euro was introduced as a physical currency in 2002. But that turned out to be a damp squib, and the dollar retained its supremacy. Now attention is shifting to the BRICS nations, who are considering the launch of a joint currency, a potential step towards de-dollarization and a major threat to the existing global financial order. Donald Trump, aware of these implications, has publicly warned BRICS against pursuing such a plan.
Said is any BRIC state that even mentions the destruction of the dollar will be charged a 150% tariff.
I did a whole vlog on this and we'll put a link in the description below, so please do check it out. While the dollar stumbles under the weight of chaos and debt, others are quietly building a more stable order. The reality is that many global South nations have already started to shift towards using more non-dollar currency related transactions. As part of this shift, China's yuan oil trade with Iran and the UAE has become a model of what future could look like for the United States. Africa is pivoting to BRICS financial channels, and digital platforms like Baidu are replacing the United States control systems. The future isn't just multipolar, it's sovereign by design. A strong dollar reinforces the perception that the United States is the anchor of the global financial system. It sends a message. The US isn't just participating in global finance, it's setting the rules. So whether you're in Nairobi or in New Delhi, Caracas or Cairo, you need dollars to trade, to invest, to settle oil contracts. And the stronger the dollar, the more indispensable the United States becomes to the functioning of global markets and the global economy. And then there's the soft power that comes with it, the ability to influence without using force. The dollar gives the US enormous strategic leverage. Take sanctions, for example. When the US restricts access to the dollar, even powerful economies like Russia or Iran struggle to function globally. The US is said to have sanctioned over 1/3 of all the countries globally since it started using this mechanism. It is the most prolific user of sanctions. In 2024, it had over 15,000 active sanctions ongoing against individuals, countries, organizations. But that power only works when the dollar is trusted, dominant, and yes, strong. Also remember, each time the United States uses that particular stick, it risks losing some of its power, as President Donald Trump has himself noted in the past.
Ultimately, it kills your dollar and it kills everything the dollar represents, and we have to continue to have that be the world currency. I think it's important. I think it would be losing a war if we lost the dollar.
And it's not just the US. Each time the EU threatens to take away the Russian reserves, for example, in their central banks, they threaten the Western domination of the financial system as nations now start thinking of alternatives. A strong dollar reminds everyone that if you want to play in the global economy, you're playing on the United States field. You're using its currency, its payment systems, its financial networks, and that's basically influence without needing to fire a shot. Although, of course, it helps if you have a strong military backing, which the United States does, as we know. A strong dollar also sends a clear message to the global investors. This is where your money is safe. Whether there's a war in Europe or a debt crisis in Latin America or a market crash in Asia, investors used to rush to the dollar. But today, many are asking, is the dollar still a safe haven currency? It's psychological. The dollar represented stability, credibility, and strength. A strong dollar amplifies that particular image. It makes the United States look unshakable. And yes, that's important for prestige. It shapes how the world sees American institutions, the governance, and even its political leadership. It reinforces the idea that the United States still leads, not just militarily, but financially and symbolically. And this is that link that has now been broken, which is a calamity for the United States. Donald Trump has come into power. He values unpredictability as a strategic tool, both in his business career and in his political life. And this has been a recurring theme, and he has openly said so. He likes to keep people on the edge and thinks that the United States benefits when other countries do not know what it is about to do. In his 2011 book, Time to Get Tough, he wrote, No one is going to touch me because everyone will be afraid of what I might do. That's how we have to play it. Trump's show, The Apprentice, also hinged on this unpredictability. Every episode ended with those famous lines, "You're fired." Were kept in suspense as to who would actually be fired until the very end.
You're fired. You're both fired. You're fired. You're fired. You're fired.
So his management by theatrics in The Apprentice show echoes his approach in politics as well. The idea of surprise as power. Now let's take one real-world example from just a couple of days ago. Trump's trade blow-up with Canada. He was agitated. Canada is saying it's still going to go ahead and implement that digital tax on US technology and US tech companies. Now this is something that the US tech giants have been very upset about, since it would have cost them billions of dollars. Canada's tax actually was retroactive, going back to 2022. Remember, the tech bros all put in money to help the Donald Trump campaign. They were all there on his inauguration. Well, they pulled those strings, and Donald Trump said he was cancelling all trade talks with Canada due to what he called the egregious tax, while saying that Canada was a difficult country to deal with. It worked. 24 hours later, after that threat, Canada took back that digital tax and said trade talks should be able to continue now, which they have started. But this unpredictability doesn't stop at Canada. Stay with me. This one's wild on how Trump used the same playbook with North Korea in 2017, if some of you may remember. He even said he's fallen in love with Kim Jong-un. Seriously. First, Trump threatened North Korea with massive retaliation using this highly charged rhetoric. And he said that Kim Jong-un would be met with fire and fury like the world has never seen before. And yet, a few months later, he just pivoted dramatically. And he became the first United States sitting president to go and meet with a North Korean leader in person. And he praised Kim there as being very talented and said they had fallen in love. They were ridiculous letters that they then went on to exchange, and I will put some of them on the screen. All of this translates into a foreign policy style that is often chaotic on the surface, but rooted in a belief for Donald Trump that unpredictability can force better deals, and it intimidates rivals and it maintains leverage. Now, whether this is effective is debatable, because some argue that this may give him some short-term tactical wins, but others say it actually is eroding long-term US credibility. However, the markets, unlike Trump, do not like unpredictability. They value stability. So even when the acronym TACO, Trump always chickens out, was used to describe Trump's approach, or has become used to describe Trump's approach, I should say, they were happy because they knew that this meant that things would actually continue as normal once that blip in the market, up and down, saw its way out. So far we've seen how a weaker dollar is eroding America's prestige and leverage. But the bigger story, how Trump's volatility is driving that collapse. Let's dig into that. And starting with one of the wildest global trade reversals you'll see. Already in the first 6 months of his presidency, Donald Trump has launched a full-blown trade war with China, imposed tariffs on the European Union, Canada, and Mexico, the country's top trading partners, and an additional 85+ nations. Donald Trump's chaotic so-called America First policies have got investors spooked. President Donald Trump may believe that the US dollar is always going to be the currency of choice, but the global response is sending a different message back. Uncertainty, which for the first time no longer views the dollar as its safe haven. Tariffs have triggered retaliation in some cases. Global supply chains are disrupted, and markets have seen a wave of volatility. Close to a 30% move from the lows to the highs have been seen both for the Nasdaq and the S&P. For the US dollar, this has meant trouble. First, a tit-for-tat tariff war makes US exports also more expensive, hurting the demand for American goods and weakening the demand for dollars, which we need to buy them. Second, investors don't like chaos. Trump's unpredictable trade announcements have spooked them. They've made them very nervous and pushed many of them to start diversifying away from the dollar. In short, The tariff war may have been intended to boost American manufacturing strength, creating jobs and boosting domestic income, but it has introduced a deep uncertainty into the global economy, and that has directly undermined the dollar.
The President sent this note to the Fed chair. It says, Jerome, you are as usual too late. You have cost the USA a fortune and continue to do so. You should lower the rate by a lot. Hundreds of billions of dollars are being lost and there is no inflation.
Then we know that the strength of any currency depends on trust, and nothing is more pivotal to that trust than an independent central bank. But under Trump, even this is being challenged for the first time ever. He's publicly criticized the Federal Reserve again and again, often on a daily basis. Just very recently, in a post on Truth Social, a day back or so, he wrote a note to the Fed and then he shared it with all of us. And he writes, Jerome, too late Powell and his entire board should be ashamed of themselves for allowing this to happen to the United States. They have one of the easiest yet most prestigious jobs in America, and they have failed and continue to do so. If they were doing their job properly, our country would be saving trillions of dollars of interest costs. The board just sits there and watches, so they are equally to blame. We should be paying 1% interest or better. He's been calling those higher interest rate levels crazy for a while now, and he's described the Federal Reserve Chair Jerome Powell as an enemy. At one point, he's even hinted at firing Powell, which would be an unprecedented move in modern US history. More recently, while softening his rhetoric, Trump has suggested that he's now maybe going to name Powell's successor early, despite the fact that Powell's term doesn't end until May next year, almost 1 year from today. Doing so would effectively undermine Powell's authority, and it's going to leave the markets in a state of uncertainty. They're going to be forced to monitor the statements of Powell as well as whoever he names as the successor. The markets are going to be forced to monitor the statements of two competing voices to gauge the direction of monetary policy. Scott Bessent, the current Treasury Secretary, who is one of the options being floated for the central bank governor's position, has said that he will do what the president wants on interest rates. It's going to be an utter disaster if he did do that and watch the dollar crash and the treasury rates go through the roof if he's confirmed for this position. This isn't just political theatre, it's a direct threat to the credibility of United States monetary policy when the markets start to believe that the Fed is being pressurized into decisions rather than acting independently based on the economic data that they get. So they're going to lose their confidence. And when that's going to happen, investors are going to begin to hedge their bets. They're going to move their capital out of US assets, and they will seek better returns and safer assets abroad, which is what we are already starting to see happen. So they're already moving into alternative currencies like the euro, the Swiss franc, or even the gold. The gold is up 30% since the start of this year. All of this leads to a weaker dollar, not because of inflation or interest rates, but because of declining institutional trust.
36 trillion. It's a ticking time bomb. And according to the IMF, it is ticking louder than ever.
The third pressure point is America's rising debt, and this is serious. At $36 trillion, it is at the same levels it was in World War II when the United States was in a war. Elon Musk is posting on a daily basis about this being insane. When the richest man in the world starts freaking out about debt, you know something's wrong. And this is him crying out despite his earlier close relationship with Donald Trump. Under President Trump's first administration, the US government passed a massive tax cut in 2017 without any offsetting spending reductions. That pushed the national deficit sharply higher, even during a strong economy at that time. Then came COVID 2019. The United States injected trillions of dollars in stimulus. Some of it was necessary, but it was overall very expensive. The debt to GDP ratio now is record highs, and there's absolutely no long-term plan to bring it under control by either party. And now the United States is in the midst of another massive debt-raising bill, which Donald Trump has inaptly titled the One Big Beautiful Bill, and it's expected to add another $3.3 trillion to the United States debt. Critics say that these reckless policies are fueling a United States debt crisis that is now threatening a global financial reset. Now imagine if you're a central bank in Asia or the Middle East. Would you still park your reserves in the United States dollar or the Treasury bills if the government keeps spending more than it's earning? It's not a conspiracy, not because you want to take down the United States global hegemony. It's simple economics. When a country piles on debt with no clear repayment strategy, global investors will start to worry. Will the government have to print money, which will affect the inflation rate? Will taxes be raised dramatically, which will affect the growth of the economy? All of this makes dollar-denominated assets less attractive, and again, reduces the demand for the dollar itself. We've seen signs that the global central banks are quietly diversifying away from the dollar, increasing their reserves in euros, Chinese yuan, or gold. The message is clear. Faith in US fiscal discipline is fading, and that's chipping away at the dollar's strength. Whether it's the rise of a BRICS currency, the fall of the safe haven dollar, or the threat of a de-dollarization, the signals are clear. The dollar battle has already begun. Thanks for giving me your time today, and do share with me your thoughts on what you think would be needed to resuscitate this dollar. Have a great day.